All right, so we're going to go over one more time how to set up your charts. This will be our third time doing it. You guys all better know by now, damn it. All right, yeah, I know, KK, you already know this stuff. You're killing me. So here we go. We're going to set up our charts for the fourth time, right? So we're going to go to indicators. Once you go to indicators, you can search. Go up in the search column. You can type out moving averages. So once you go to moving averages, click on the left side of the thing and you can select a star, right? A star will put it into your favorites, right? So you're going to do moving averages. You're going to go to TD sequential. So I'm going to show you my favorites. So the ones you need are, you need moving averages, you need TD sequential, and need the until 1 mil beast swing indicator. So you can find the until 1 mil indicator in the invite only scripts. All right, there we go. So it should be just on YouTube now. So you can find the until 1 mil in the indicator scripts. Okay, so once you add this, you can go up to the top left corner. So once you get your indicators, you can select your indicators from your favorites. And all you do is you're just going to hit moving average 5 times. 1, 2, 3, 4, 5. Only for the daily do we use the 128-day moving average indicator. Once you've selected your moving average indicators, you go into them, you go into inputs. We have them all laid out: 7, 30, 50, 100, 200, and you can find all this information. I will add it inside of our Vampire chat. So you can select here, change the length, go to style. I always go one step up right here. And then I select the color, can be selected inside of this box. So for the 7, it's royal blue. For the white, for the 30, it is white. For the 50, it is orange. 100 is purple. The 200 day is red. And the 128 day is always yellow. You're only going to use the 128 day on your daily chart. Same thing applies once you go to your until 1 mil scalper, which again can be found in your invite only scripts. When you go into that, you go ahead down to your drop down menu. You go into settings. Now I only select the show strategy setting, and then I unselect every single indicator because I don't need these. You're already getting all of these indicators when until 1 mil sets up your scalper for you on your lower time frames. I then select short and long only. I use red for the shorts and green for the longs. Now you can see how perfectly the scalper works with the longs, the short, and the long. All you would have needed was the beast scalper to basically play out the last 6 months. You would be in absolutely massive profit. You called the long perfect, it called the short perfect, it called the long perfect, it called the short perfect. It just has called all of these out. Now, using my trading skills and tactics and Until's trading skills and tactics, I've combined a more simplified version of trading for longer and medium term trading. Now, I do not set up my trading to do scalping. This is not for scalping out, 3-minute, 13-minute. This is for longer term trading. This is for swing trading. So I like to use this indicator and my own strategies to trade out, 4 hours, 12 hours, 1 day, all the way up to a month. And we use that using all of our moving averages, using our supports and resistances. So going forward, the second thing we're going to do, so we're going to apply our notes back on here. You can always blind out your notes by hitting the little eyeball over here. It hides all the drawing tools, just like that. So now the next thing I do is when I go into my charts and I'm trying to figure out my targets. Let me remove this off here. All right. Okay, so when I'm trying to find my targets, the first thing I'm doing is I'm looking to set support and resistance levels. And in order to set support and resistance levels, you go to the top left, you find a horizontal ray, and you can drop this. Just left click it onto your chart, and then you can drag it. Now all you have to do is just click it, and you can drag it anywhere you want to. You can make it any color you want to, down at the bottom, make it different thicknesses. Now, when I try to lay down my support and resistances, the first thing I do is I go and I look for confluence. Confluence is an area that has been touched or closed or opened upon multiple times. So just looking at this chart, I can see that right here, I had 2 perfect touches, followed by 2 more perfect touches, and 2 more perfect touches, and then a wick, and then another wick that was perfect here with close opens and closes here. So this area now would be designated as a support and or resistance zone. And you can easily look and find these areas. Now, you start with the higher time frames and you move down to the lower time frames. I never go below 6 hours when I'm looking for these support and resistances. I'm looking for confluence on higher time frames. So here you can see that this exact area at 8261 would be a top end support and or resistance level for any kind of if we were to moon right now, right? We would look for this to go up, touch this line, and then get rejected off of it before it being able to go up and try to attempt to pierce it one more time. This helps you in your trading because it also allows you to set your stop losses. It is super important to understand that you need to understand where the supports and resistance lines are to set your stop losses when you're trading. This line right here, right, that you set up, now it is not only a resistance, it is also a support. So it acts in both directions. It's irrelevant. All that's important is you understand where the line is. If the price action is below the line, that is resistance. If the price action is above the line, it is then support. But the line always works in both directions. All right? Moving averages are the second thing you need to understand. So you need to understand that as moving averages are moving through the space, they are a correlation of time and price action. These moving averages, let's get rid of this. These moving averages are super, super important because traditionally, when a moving average crosses above and or below the price action, it is considered a death cross or a golden cross. Now, the newer terms have been kind of adjusted. So in order for this to be a death cross, you have to have a smaller time frame MA go over a larger time frame MA in order for it to be a death cross. If not, it would be then considered a bearish cross, right? So it would be a bear cross, not a death cross. So you can use the term. I try to stick to the traditional terminology, which is any action above the price would be a bearish, any action below the price would be bullish, and that it's just a general rule. It's a general fundamental that I like to follow. So as you're moving through and following your moving averages, I like to also trade off of my moving averages. Now, you can't just simply trade off the moving averages only. When you trade off the moving averages, you need to understand where to set your stop losses. So that's why you would bring into play your resistances and supports. So if you see a cross and you want to enter a trade, you need to set your stop losses accordingly. Otherwise, you're going to get taken out of a trade. Right? So right here in this particular trade where the cross happened, if the cross happened here, your stop loss would have possibly been above this and or it would have had to be all the way up to this line here. Right? So you would have had to understand where you would have had the highest probability of resistance for this particular price action if it would have kicked up. So this probably was going to, where this cross happened, this would have been a little bit tougher trade right here because you did get this long wick action that did pierce back up through, but then it was rejected by the 30 MA and it tumbled down. Now remember, crosses always have a delay. Do not expect the cross to occur and the price just to tank out. There's always a delay, whether it's a day, 2 days, 3 days. Now here's the 3-day chart, so you could have expected a 3-day delay before the cross really took hold. So the next thing is you want to always verify. So the reason I have 4 charts set up is I have 4 charts set up. So I have my daily. So we're going to black this out. So here you have your daily chart. Your daily chart is able to allow you to use the 128-day moving average effectively. Now I look at the 128-day average as my bullish and or bearish indicator. This is so simple right here. This indicator, the 128-day, has called out perfectly over time, and I will show you this. So this one indicator has called out over the last 4 years exactly the price action. Wick, it went through here. Now if you look up into here, it's super important to notice that only one day closed completely above the 128-day. One single day. That's it. And then here was another one single day above the 128. Right? I am looking for, if this were to go bearish, this would need to spend multiple days above this line right here, which is now sitting at $7,692. This moving average right here needs to get pierced and closed above for no less than, let's call it 3 to 5 days before I would start to go bullish. Right? Now this has to get really broken with volume, and it needs to close and stay above this price average. So as you look down and you follow this down, let me get rid of my TD, right? You can see how perfectly wick touch, wick touch, wick touch, pierced it, never closed below it, wick touch, perfectly. Look at this, just rode along this entire way, all the way down to $255. It finally was pierced at $255. So if you only would have used the 128-day as your trading strategy, you would be a gazillionaire. It's that simple. So as this 128-day line has called perfectly every top and almost every bottom since 2014. This line is ultra important to us and our trading as we're going through over the next course of, I don't know, whatever it is, 6 months, a year, however long it takes to get down and to get back up. Now it could go back up. Now it's irrelevant to me. I am a swing trader. I would prefer if it went up now and then I could just trade out to a gazillion dollars. But this line is what makes me both bearish and bullish. People always are saying, Vamp, why are you a bear? Why are you a bear? Vamp, you're so bearish. It's not me that's bearish. It is the 128-day line that is bearish. And people just who don't fundamentally understand trading, right? They don't understand that this MA alone has called out the history of Bitcoin perfectly. And we are basing all of our trading on this single line. I am a bear. If this line tells me I have to be a bear. It's not me that's deciding to be a bear. It is the line that is deciding to be the bear. And until this line is broken, we will remain swing traders as bears only. And we will trade the trend. Our trend is bearish. We are scalping the bounces. That's all we're doing. right? Now this can come up and it can hit the line, and all we are going to do is just trade the swing. And we have successfully traded the swing, and we have amazing tools to trade the swing, right? We now have the B scalper, we have our moving averages, we have our supports and resistances, we have our historicals. I incorporate all of these elements into trading perfectly, right? Or as best that I possibly can. And I have called the majority of this all perfectly. The scalper has called this perfectly, right? It's just having faith in the charts, having faith in the indicators, having faith in the calls. You know, and the thing that I'm missing on this chart is a long call. Now, different charts, different exchanges can give you different signals. Henceforth, why when I have you set up your charts, I like to use a Bitstamp, a Bitfinex. You got to vary up the charts so you can see all of the different options that are available. I do not use BitMEX. I suggest when you set up your charts, you use Bitstamp, Bitfinex, even I don't like the volume on Binance. So if you are going to use Binance and you're trading on Binance, just don't use the volume indicator on Binance. You're only ever going to use the volume indicator on your one-day chart. The volume is only important on the 1 day. The volume on the 1 day then gives you a relative idea of how much volatility, how much action is in the market, and you can see the market sentiment is also loaded clearly into the volume, and you can see our market sentiment right now is not good, right? This market sentiment has just shown us excitement. This is all excitement. This is hope, right? And this is just people walking away from the market. And you can easily look at the volume and you can read and understand the volume. We just don't have any volume. So it's harder to get a bullish reaction without volume. You need to have people into the market in order to move the market, right? And in order to move the market, you need to increase the amount of capital that goes into the marketplace. We just don't have the bodies to put in the dollars. There's no faith in the market here. And that's what your volume indicator is telling to you, is you're trading right now. So once you do get all of your indicators put onto your charts, right? And there we go. Oh, I already had one. X this one out. You will have 4 different chart setups. So you're going to have one chart setup that's just for the 1 hour, right? This would be considered, oh, let me move the volume. You do not want the volume, once again, on any of your charts other than the daily. This is why we have 4 charts, and one of them is a daily chart. So here you go. Excuse me. I got a frog in my throat. So here is the 1 hour scalper. Now you can use the scalper in order to use for your short-term trade options. When you have a lot of time and you can trade, this is one of the charts. You're going to use the 1 hour and the 6 hour. These are the only ones that I use to go short and long. So look, we just got a short call on the 1 hour trade. Now, in order to play this correctly, you have to understand that nothing is perfect, right? Always the higher MAs, the higher timelines always trump the lower timelines. That's a fact, right? So you can't just play this 1 hour chart and 6 hour chart without understanding and looking at the higher time frames. These are all, everything here is being pulled along ultimately by a higher time frame, right? These lower time frames you can do scalping trades on. But as you get into the higher time frames and the higher moving averages, they trump the smaller time frames and the smaller moving averages. You might have a million. Look at this is a bullish cross, bullish cross, bullish cross, bullish cross, all great crosses, right? But if you have a death cross sitting at the 12 hour in the same position, these bullish crosses will be negated by the higher time frame moving cross. This is why I set up your charts in all different time frames. So here you got a short call on your 1 hour scalper. when you are playing this short trade, you're using your TD sequential. So here is your TD sequential. You came up to a 9, so you knew you were getting close to a reversal. One thing I do teach you using your TD sequential is a 9 is never a confirmed reversal. It bleeds. 9s bleed, especially on smaller time frames. So here you had a bleeding 9. This just bled up, right? Before it finally got to the top and it decided, hey, I'm going to pull a long candle. Now, when you guys are trading, I give you on the Vamp package, I put up and I will place it in there in a minute. I give you a how Chris trades chart, right? It's basically a vampire list of 1 through 6, how I trade, right? And number 1 is the trend, and it's the strength. I trade on a chart of 1 to 6, with number 1 being the strongest, number 6 being the weakest, and number 1 is the trend. We're in a bearish trend in overall and global and the macro. So I trend down, right? And as you get down to smaller time frames, you can see that, trends count, right? So we clearly are in a bearish trend on the macro. As we get down here, the second thing is you can look, then you have candles, then you have TD, then you have the moving averages. So the first thing you do is you trade the trend. Second is the moving averages. Moving averages trump out. So look, here you go. You had a 9 on your TD sequential. This should have called a reversal. Now it is an imperfected 9. It is below the 8. But it was trumped by all of these bullish moving averages. Henceforth, why trend is number 1. Number 2 is moving averages, and then it's candles, and then it's TD sequential. So you'll find all this information. I'll lay it out for you guys in the Vamp package. So here we had a short call. Now, as you would play this short call right here on the 1 hour, you would go and you would have to find back here, where is my support and resistances? You're going to have to go way back here to find these, right? Because you're going to want to set your stop loss, a trailing stop loss. So as I look over here, I would start to look for my all the way across the board. I mean, this was easy to find. Look at the confluence in this area. Look where this peaked out, right? This would have been an easy target to look for a long play right here, right? You would have gone right into somewhere in probably there. All right, so look. Body, 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 wick, body, body, wick, wick, body, body, wick, wick, right? And we came up in body, body, a little lower, and a wick. This would have been an easy top to call right here, right? You would have said, hey, we're going to get up here and we could possibly bounce off here. Now, playing this as a short trade, you need to be careful. So how I play this as a short trade, I set myself up for a small loss. So when I do trade, I am already setting myself up with an acceptable loss, and that is my stop loss. Now you can use a trailing stop loss, which always should be market. But in this case, I would be going back to the left side saying, okay, if I want to play this, I'm going to probably play this up here. So there would be my tight stop loss for this situation, which I would have moved down already. And up here would have been my looser stop loss. So if I would have played this trade, I would have got in at the short call. Figure would have gotten at 63.90, 63.80. You would have initially set your stop loss at 6,400. Right? Now, as this falls down, all you're doing is you're moving your stop losses down. So probably right here where we're at. I would be watching for this in 28 minutes to close and start a new red 1. If this did if this started a red 2 trading below a red 1, that would be very easy. I would just move my stop loss down again and continue moving my stop loss down into profit as it just kept dropping. All right. Now, super important. When I'm moving my stop losses, I'm also looking at the crosses on these charts right here, right? I don't want to have a super wide open stop loss if I see a golden cross, if I see a bullish cross. I want to place a tighter stop loss. And or I don't want to get into a short trade here. I wouldn't want to get into a short trade here with 3 golden crosses below me. This just wouldn't make sense, right? I would wait for them to pass like this has. They've all passed. They're all gone here, right? Now you're not showing any more bullish crosses here. You only have, your price can take on each moving average individually. It's harder to punch through a clustered group of moving averages. See, look here, you have a clustered group of moving averages. Yeah, here it's harder. You go through it and it just gets rejected. It's harder to go through a clustered group of moving averages. It's easier to pierce through single moving averages one at a time, right? And that's what you do. You're just looking for the best trade setup situation for you to trade effectively. All right. Once you get your chart, so there's our 1 hour. I then use the 1 hour and the 6 hour together, and I go up here, I rename my chart 1 hour, 6 hour, and I have a 1 hour, 6 hour. All I do is I toggle between the 1 hour and the 6 hour here, right? All right, so let's go over and look at what the 6 hour told us, right? The 6 hour said, wow, here is our top right here. It was pushed down by the 30-day moving average, right? The 30-day, it came up and used the 30-day as resistance. So your 30-day correlated with your 1 hour. Remember, we got down to the 1 hour. We showed the wicks. So the 30-day correlated with the 1 hour support and resistance line that was up there. And it was a double whammy. So you had the 30 come down, you had the support and resistance historically that all acted together as a hammer to pound this back down. Now you have the 100-day down here. So I would be on the 6 hour chart now watching for the 30-day to pass over the 6 hour, the 100-day purple. And depending on where this crossed over right here, I would either be staying in a short trade or taking profit laddering out of this short trade. And then here you have the 128-day moving, the 7-day moving average coming up. This is support. Now remember, trading the 7-day average is like splashing your hands in and out of water. There is no support and resistance. Your hands move freely in and out of the water, just like it does. That's why my moving average is blue, because it is like water. So as you're trading this, you are now 25 minutes into this next candle closing, your 6 hour candle closing. It will now trade below the 100-day and the 30-day. Now you should possibly see when this candle closes, both of these moving averages coming together to create a bearish cross. That bearish cross would then give us good continue action or follow through action to move on to the next trade, right? And or moving our stop loss down. So if these cross, I would then use where these moving averages cross. I would put a little bit above, right, my stop loss above the moving averages. I would still be in profit, but I would use my moving averages as my upper level resistance in case we did get a bounce, and it would hit those moving averages, and I felt it would just keep going down. All right, you now then also are going to use the 4 hour and the 12 hour. Now this B scalper does not work on the 4 hour or the 12 hour. I use these because I like the moving averages on the 4 hour, and I love the accuracy of the 12 hour. The 12 hour chart is the most accurate chart in crypto. I use this chart religiously, right? Let's see what we have set up here. So we go down. We are about to close out the daily. We're closing out the daily on a unbelievably bearish candle. This is a bearish candle. This is a shooting star candle at the end of a long line candle, right? This is a trend reversal candle. Now, can this keep going up? Yeah, of course it's possible to go up, right? But we are playing the odds. We are playing percentages. The higher percentage of this is that this is a reversal candle here. And look, you can see, you can see that this candle also played out here. Now this is more of a hanging man candle, and you saw you had a drop down right there. You know, it's always easy to go back. Look, here you have the same candle set up, the long line candle here. going to black this out. You have the long line candle. Well, now this, I look at this as a more substantial candle than I do this, right? I look at this as a higher probability of a turnaround candle than I do this. Now, as I play my candles, I'm always looking for reversal candles, spinning tops, hanging man candles. I'm looking for trend reversal candles at the top and or the bottom of the particular price action, right? And I'm always watching out for spinning top candles. So look, spinning top, spinning top, spinning top. These spinning tops to me signal a reversal is coming or a reversal is here, right? There's really hard to find candles that are dead on. Like you need a pretty solid hanging man candle at the top, or you need a super tall wick at the top of a trend shooting star candle to really get, or look, here's a good hammer candle. This was a great reversal with a 9. So when you're trading, multiple signals are needed to place a trade. I'm looking for multiple triggers. Okay, I don't see a death cross here. So this doesn't give me 100% or a super 90% that this is going to turn around. I don't see a death cross here. Let's go up to the 1 day. I don't see a death cross on the 1 day. Now I see support on the 1 day. I'm sorry, resistance. So we're held down by the 7. We got the 30. We got the 50s not helping us at all. So I'm always scrolling back and forth from all of my indicators to find the best possible trade setup. And in this possible trade setup, you don't have any help at all from your moving averages here in these higher time frames. Let's go down to the 6 hour. So you can see you got a possible close of a death cross above here. This closes in 21 minutes. This would be a good signal to continuation of your short trade that you should already be in. We're going to go to the 4 hour. So you do have the 30 trying to fold over the 200 here. You did get a green 9, which is a good candle for a reversal. This was it's kind of a perfected 9. The price action is over the 7 and the 8. So this was a good short trade that was called. You do have another death cross coming between the 30 and the 200. You don't have any golden crosses under this. So this looks good for a possible lower continuation. Multiple indicators need to tell you that it is a good trade to get into. And when you decide based on all of your multiple indicators that it is a good trade, it's super important that you then use those indicators to tell you the strength of that trade. All right. So this is a good setup. This is a good setup for a short trade. And that's all I got for right now. Thank you.